Okay, quick explanation of equity. Equity is the difference between the property value and your outstanding debt. To simplify it, so this is a 30-year mortgage, and we're going to look at our property value after year one and our outstanding mortgage. The difference between the two is my equity. So technically, if you think about it, it's value. It's a real value in the property. So if I look at what happens over time, property value increases. This is a 7% growth. My mortgage slightly decreases over time until I get to my 30-year mark. Now we're going to look at cash flow. Cash flow is the difference between my income and expenses. So in this property, Silverviews, we've got 102,000 Rand per annum. That is 8,500 Rand per month. Operational expenses is levy, rates and taxes, property management fee, those kind of expenses is 28,200 Rand a year. My mortgage at 11.75% is that, and that means I've got an annual shortfall cash flow here, and this is my monthly shortfall, widely referred to. So now let's have a look at what happens in year two. Now remember, I'm working on 8% rental income growth, inflation linked expenses. This is linked to the prime interest rate. We're keeping at 11.75, although I think that's going to come down. So let's see what happens when my income goes up. Look at my shortfall. This is the number I want you to focus on. So year three, this is the years over here. Year four, year five, and then I'm in the positives. In year seven, I'm in the positive. So that's my rental income, that's my expenses, this is my mortgage, annual cash flow, and I'm in the positive money here. So I've paid the sum of my shortfalls up to break-even point, which was year seven. Now the real thing that I like to have a look at is equity versus cash flow. So how much money am I putting in and how much value am I getting out? So especially up to break-even point, this is quite nice. So, and remember guys, I said it's going to be better than this in Silverviews because there's still 18 to 24 months of free growth before you take transfer of this property. So this will likely increase with 100 to 150,000 Rand. So if I then look at my break-even point, which is year seven, when I'm in the money, I've generated 623,000 Rand with equity in the property, and it's paying me positive income. So I've paid the sum of my shortfalls up to break-even point, which is 161,000 Rand over a 7-year period. That is 16% only of the purchase price. Remember, once again, that was the sum of my shortfalls. So 45,000 in year one, 38,000 year two, 31 year three, 23, 15, 6, and then I'm in the money. Sum of my shortfalls up to break-even point, and which is 161,000 Rand. Then it's starting to pay me positive money, and that's my equity. I hope I've shown you the incredible power of property investment with a property like Silverviews. With the right property like these studio apartments in Silverviews, coupled with sound rental management from Rental Prop, you can end up only paying 16% of the purchase price over a 7-year period before you break into positive cash flow. Silverviews ticks all the boxes of an excellent property investment. It's a must-have for anyone that is serious about making money in property. Don't miss out. Call us 082 4949 255 because these opportunities are flying.